Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 17th. My name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic, geopolitical, and market analysis. I'm here in these daily market commentaries to not only talk about the economic data and how that implements or implicates what the markets do, but how to implement options into your portfolios. All right, well, without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get on with the economic data. Today, in the United States, not so much really across the pond. I guess Great Britain did get industrial order expectations coming in at a negative 28, expected to be a negative 25. But here in the United States, we got some actually really good economic data. Building permits, higher than expected at 1.48 million permits pulled, expected to be 1.41. All right. Now, I always talk about the building permits. It doesn't really matter how many building permits you pull. It really matters how many units you start. Well, we got housing starts, and that came out at 1.37 million starts over the expected 1.34 million. So obviously, the home builders are very confident, especially with these lower interest rates. They're probably seeing some demand going on. Now, we're seeing retail sales really slough off a little bit more than I would expect, especially I've talked about with the lower unemployment, higher JOLTS job openings coming in. We got JOLTS job openings today, 7.27 million job openings. That is over the expected 7 million, which was expected. So, over 250,000 more job openings coming into this holiday season. Now, some of those are going to be cyclical, but most of those are going to be companies ramping up for the new year because they expect a robust 2020 is what I'm expecting. So, all of these things are showing a strong economy, but we're not really seeing the consumer buy at the retail level. Now, we're going to see some online numbers, and maybe that's going to make up for that, and people just aren't going to the brick and mortar anymore. But something to keep an eye on is the consumer spending. That's really what's going to be driving the overall economy here. All right. And then we also got our industrial production, which came in at 1.1%, higher than the expected 0.8%. They did revise last month's number down from negative 0.8% to negative 0.9%. Remember, we thought that was a pretty bad number last month. Well, it's making up for it this month. We're seeing that ramp up happening. And the tip optimism coming in better than expected at 57. So that is a economic optimism gauge, and that is higher than expected. So a lot of the economic data here in the United States looking pretty good. Just like to see the consumer start to spend. We're seeing crude oil drive higher today. We're into the 60s, settled into the 60s yesterday. Now we're getting back above this value area high. The market really starting to probably get the shorts on their heels, and we could see a bit more of a pop, maybe even to that $63 a barrel mark. That being said, that's not going to help the consumer at the retail level. All right, if they start spending more money at the gas pump, that is going to pull away from some of that spending at the retail level. So again, like to see that come off a little bit more, but market wants to rally. I'm not going to try and stop it. All right, gold futures off just a little bit by about 50 cents. Really nothing to see here as the equities are, pretty much in flux, if you will. It feels like they're down, but they're probably up on the day. But let's take a look at bond futures. They are slightly higher right now, back into the 157 handle. I've talked about it. 160 seems to be the sweet spot for me, but I can understand why this is starting to see higher yields, and that's because we're seeing good economic data out of the retail sector, or out of the economic, not really retail sales, but you can see we are in a downward pattern here, and to get back up to that 160 is going to be a bit of a heavy lift. It's going to really depend on a lot of these Fed governors and when they're talking. As a matter of fact, Rosengren speaking today, they are really saying they're going to probably hold off on any interest rate move. And any surprise would be that they would cut interest rates. I don't think anybody is expecting a rise in interest rates. That being said, the long end of the tail with the bonds are pricing in higher interest rates. Keep in mind that is way down the road, though. We're not talking about 30-day Fed funds here. We're talking about the 30-year bond. All right, VIX is slightly higher. Now let's take a look at the equities. We've got the Dow Jones higher by 75 points, made a new all-time high intraday yesterday. We talked about that. But really, the market pretty strong, at least in the blue chips here, driving higher. McDonald's not one of those, and Boeing really causing a drag to that as well. Now that Boeing came out, we'll talk about Boeing here a little bit more. They're actually, I think, in positive territory at this point, up by about $3. But they were causing a real drag on the Dow yesterday. That pop today really helping and making them drive higher. As you can see here, that's causing the mixed bag with the NASDAQ down by about a point. The Boeing trade up about 3 points is probably adding, I would say, close to maybe 10, somewhere between 10 and 20 points to the upside in the Dow Jones. All right, but NASDAQ just slightly in negative territory. We could call that unchanged. One thing to keep in mind, this 86.26.5 is about a point and a quarter lower than what the intraday high is. That's during the open market operations. That print was made just before the open of the equities, and that was based on the building permits and the housing starts got a real drive higher as people came in based on that economic data point. E-mini S&Ps printed this high overnight, but it did also happen right off of the open of the day trade. So this print is a real trade. We can take a look at the 30-minute chart of E-mini S&Ps. Remember, these are 30-minute candles, gray sections overnight. Day session is in the black. So you can see if I drop on this, it's pointing to the overnight high as 32.03.5. And if we go over here and just kind of line up on today's during the day session, you can see the high over there. If I can leave my cursor on there for just a second and not move, you can see over here we have that high happening as well. Let me see if I can try this. Spending way too much time on this. All right, let's see if I go like that. It still pulled it off, but you can see this high is in tandem with the other one. That's not going to work out for me. All right, but anyway, so all-time high printed in the day session of the mini S&Ps. Inside day, as you can see, we are trading inside yesterday's range, so really kind of winding up here, trying to decide whether or not we can make that extra leg higher. The markets are still a little bit bearish. People are talking about this market being a little frothy heading into the end of the year as money managers and things of that nature are looking to want to book some profits, and that's causing a little bit of weight on the overall markets. And then we can talk about the trades that I've done today. Actually, Boeing, I didn't do anything today. You can see this is the market move in Boeing. We actually had a slam down to the 320, so we are about $9 off of the lows that we saw right off the open. And those lows were because Boeing said they're halting production on the 737 MAX. Yesterday it was a bit of speculation. Were they going to pull back on it? They just have so much inventory on this. But something to keep in mind with Boeing, they produce 52 planes a year. That's 52 airplanes per month, I should say. So that's almost a couple a day. That's crazy. That shows you how big this company is. And that is just the 737. That's just on the 737 MAX. So they're producing all kinds of other airplanes as well. So they are pumping out airplanes. And I was really surprised to see that they were able to jam out that many 737 MAXs. Now think about this. Basically, the supply of these, their inventory is going through the roof, and basically what's happening is they're seeing that on their orders. So that is a flip. You know, they don't want to see that happening. That's why they're halting production. They have all of this inventory just parked and need to get those things moved. It doesn't look like that's going to even happen until April. On the silver lining side of it, as an investor, I guess, They aren't talking about laying off that many people. And as a matter of fact, they're talking about trying to keep their suppliers afloat. But something to note with this kind of production halt is this is going to add about, or take away about 0.5% of GDP. All right, 0.5% of GDP going to drop. And we're only talking about GDP right now being about 1.5 to 2% at best. Well, a half a percentage point in that really is going to drop it. It's going to affect the GDP as much, if not more, than when we saw the government shutdown. So keep that in mind for the rest of the markets and the economic data that's coming out. If we start seeing GDP really drop, we know it's kind of held towards Boeing and that they are the culprit causing that. So couple of things I wanted to talk about with Boeing. I haven't done anything with my trade over there. I am still having my synthetic short on. I still believe that the market needs to come down and probably test around 300 because that's where we were at the beginning of the year. As we can see over here at the beginning of the year, before even all this stuff happened, we can see that the lows were 300. And I just can't imagine that the market is really going to want to stay above this Fibonacci or above 325, which we are right now. That is a huge win for the bulls in Boeing, but I think that the market really probably is going to look to come down and at least test that 300 point sometime soon. It may not happen this year, but I think that we have to try and test the 52-week lows with this much bad news coming out around Boeing. All right, Disney. Now, you guys know I put on a synthetic long based on our webinars and the rules in and around that. Disney hasn't really gone anywhere. As a matter of fact, it may have even been more to the downside since I put this trade on. But keep in mind, how do we stay with this trade? How do we lower our cost basis on this? Increase our probabilities of success? I was expecting Disney to move higher and test that 153 area where that is the high, test that value area high. It just hasn't been happening. We're getting a bunch of back and forth. It looks like it wants to start going sideways. So this is the time to start trying to lower my cost basis on this trade. And so I decided to go in, get a little bit aggressive, and selling the January, which is going to expire in 31 days, selling those January 160 calls in there for 50 cents. So lowering my cost basis in this trade by 50 cents per contract. All right. So lowers my break even on this trade because I've lowered my cost basis on this trade by 50 cents. I am limiting my upside potential, but remember, I was expecting this market to go and trade 153 and change, maybe make a new high, trade 155, but my 160, if it gets up there to 160, you know, those are rich man problems, right? When you achieve an outpaced or an unprecedented move to the upside, that would be well and above my profit target for this trade anyway. So I decided to lower my cost basis while we're trying to stick with this trade. All right, and that's about it. That's all I've done today was this Disney trade, keeping an eye on the rest of them, and preparing for the webinar on Thursday. I've got two of them. I'm doing one with Steve Bigelow where he is going to be talking about candlestick patterns. You know, I don't talk a lot about candlestick patterns. I have a relatively rudimentary understanding of candlestick patterns compared to Steve Bigelow, who is probably the guru there. And I'm going to be talking about option strategies in and around his directional assumptions on these underlyings. All right. So check that one out, and then check out my course on Pro Trader strategies. We are building a portfolio using options. So how do we use these options to build an overall rounded portfolio? And that's what we're going to be learning about in this course. So hopefully you can check that out. That's all I got for you guys. Other than if you can't take that, take it easy.